Good morning. This is Inside the Machine for Friday, July 22nd, 2011. As always, please note that everything in this presentation is based upon simulated test results and not based on actual trades, and there are no guarantees of future returns. U.S. stocks closed sharply higher Thursday after European leaders agreed on a final bailout package for Greece, in addition to some further encouraging earnings reports that were released throughout the day. Prices were able to break out higher for a nice follow-through session as we anticipated a breakout from the previous day's tight trading range day. Financials and energies were the two strongest sectors in the S&P, and all of the key 10 S&P sectors were higher for the trading session. Looking at the futures markets before the start of today's trading session, all of the futures are pointing to a slightly higher open, with the futures up a couple of points, and we'll see how the markets digest the recent price action that we've seen. Looking at the world markets, European shares closed at their highest level in nearly 2 weeks on Thursday, after once again a draft document showed plans for a wide-ranging response to the region's debt crisis at a meeting of all of the Eurozone leaders. All of the major European markets were higher, with the Paris CAC leading the way once again with gains of greater than 1.5% on the session. Looking at the shares in Asia, all of the major indexes were mixed to slightly lower, with the Shanghai Composite seeing the worst of it with a loss of greater than 1% on the session. North and South American markets were all higher, with Brazil leading the way, posting gains of just shy of 2%. This is as of the most recent closing prices. Continuing to focus on the world markets, the strong rally in the markets now have the world markets in overbought territory. The average 2-period RSI reading of the country fund ETF universe that the machine follows is currently at 86.18, and ideally a pullback would be likely over the next couple of trading sessions. As we've said in the past, as the news go, so do the markets, and any sign of further positive news announcements are going to propel these markets even higher. Eventually this will pass and the markets will break out of the recent news-driven trading range, and more normalized conditions will return to the marketplace. I want to turn our attention now to the model portfolio for the upcoming trading session, and the model portfolio has a nice mix of stock and ETF signals actually. It's surprising to see with the higher prices yesterday that there were many stocks that actually pulled back and triggered some new potential trade setups. There were actually also a few exits that were generated in some ETF positions that the model portfolio had been scaling into, and you can look at charts of BRF as well as XLV to see some of those exits and some of the price action affecting some of those ETFs. I'd like to mention again that these markets have been a little difficult to trade lately with such a news-driven marketplace, and many of the professional traders have been getting whipsawed by this recent price action, and users of the machine can be confident in their daily attack to the markets that they have such a solid game plan and a solid methodology of selecting the most high probability trades to invest the cash in. And I'd like to announce that the machine has just made entering all of your trading signals a much easier task, as we welcome Lightspeed on board the trade execution platform, and they are open and ready to take on new customers that would like to utilize the trade execution functionality. So that's all we have for today. Have a great weekend, everyone. We'll see you back here on Monday morning.